In this video, a wide-ranging report from Fidelity Digital Assets about Bitcoin, ETH, and then some of the other narratives in crypto in 2023, how they see it. We'll also have a small update on Bitcoin and ETH in terms of their price action right now. Where do Bitcoin and Ethereum go after such a strong January? Well, as you can see, Bitcoin is taking a bit of a breather right now. The narratives for Bitcoin is really inflation. There is another inflation figure on the 14th of January. US CPI comes out. If that comes in below expectations, you just expect to see more general strength for BTC and people buying these dips. A good, healthy few days of downtrend, in my opinion, though, just to flush out any kind of latecomers to this rally. In terms of Ethereum, a lot of people expect this to actually be really weak around the Shanghai upgrade because they are enabling withdrawals of some stake teeth. I think that narrative is actually the wrong way to look at things, and Fidelity also go through this as well, so I'll show you this. But as you can see, Ethereum is really, really strong right here, coming into this resistance around 1700. If ETH goes well and there aren't as many withdrawals as people believe, this thing is definitely going to break resistance, and the next level really is up at 1900, possibly pushing into 2000. So ETH from a technical perspective looks really strong with that Shanghai upgrade that may not be as bearish as people think. If you are a trader, make sure to get your deposit bonus on Bybit, up to $4,000 on Bybit via that link. Check that link out. You can get the deposit bonus and trading bonus and trade with me on Bybit. Fidelity are focusing on three areas in this report, which we'll go through, which is Bitcoin as an asset, Ethereum as an asset and its upgrades, and then the products that are actually built on Ethereum, including trading, lending, and what they call real world assets. We'll get to Bitcoin first though. So Bitcoin really they see as just a play on the macro economy. So Bitcoin being money is really a macro asset, and they really look at it in relation to interest rates and inflation. So if peak inflation is indeed behind us, then the long-term interest rates may move lower as we approach the end of the inflation-focused rate hiking cycle. Nominal rates may fall if peak hawkishness is in the rearview mirror, while inflation expectations, which never materially increased, will likely continue to remain relatively unresponsive to inflation beginning to normalize, netting a potential tailwind in the form of falling forward real interest rates. So falling forward real interest rates is something that Fidelity see as being positive for Bitcoin. What they've done here is looked at the 10-year TIPS, which is Treasury Inflation Protected Securities. So that's like inflation protected yield that you can get. They've inverted that, and as you can see, it has a fairly decent correlation to the price of Bitcoin, especially over the last few years as Bitcoin becomes more widely known as just an institutional grade asset. So as we see TIPS falling and the inflation expectations may be falling down, then that could be a potential tailwind for BTC, and that's what we've seen play out over the last few weeks with that kind of jump up in BTC as the market's kind of turned over from inflation now to kind of supporting growth a little bit more. Before we get into the next section, an update to the crypto course is coming this week, and the price is going up when the update comes. I've got a ton of research and updates on Bitcoin and Ethereum scaling, a bunch of other projects and how I see the market right now. Check the link in the description. The update is coming this week and the price is going up when that update comes. The next piece of data is fascinating and really important if you're looking to allocate some of your funds towards either Bitcoin or ETH or a basket of crypto. So Fidelity were looking at the strength of Bitcoin over the last year, 60-70% drawdown, massive bear market. But fundamentally, transactions actually held up pretty well. So the number of active addresses stood at 333.5 million. This is good to have in your mind in terms of how big is Bitcoin, like how many people use this. Around 333 million people are actively using the Bitcoin blockchain. It was a decline of 8%, but relatively resilient given the price drop of approximately 65%. So 330 million people using Bitcoin right now, a huge amount of growth potential in the years ahead. Hash rate grew by 52%, and the amount of Bitcoin nodes steady at around 15,000. What's more interesting is the market cap dominance of ETH and BTC over time. So back in 2018, crypto, which is basically non-ETH and non-BTC, was about 50% of market share. So even BTC itself, you can see around 42% of market share was Bitcoin. Now, fast forward to 2023, given the growth of crypto that we've seen, all of the new projects and everything that's come out, Bitcoin is more dominant now than it was at that time in terms of Bitcoin, ETH versus crypto, which just shows you the strength of a solid asset that can be widely enough held by a lot of different types of institutions. ETH has grown massive market share as well. So obviously, a small amount right here, growing very, very well. So ETH dominance and BTC dominance are really, really strong, which kind of goes against the narrative of there's so much more choice, there's so many more protocols. The rest of crypto only takes up 25% of the market cap dominance versus 50% in 2018. Dominant protocols really do suck up most of the attention, transaction, liquidity, and usage. And so this kind of proves that. Now, looking at BTC dominance as well, we can see here that we haven't even taken out the lows, but now we're moving through the cycle. The cycle's changing now, and we're going into 2023, which is usually accumulation year before a halving, because we have the halving in around March, maybe March, April 2024. That's when you get a lot of attention on Bitcoin back as well. So back a few years ago, maybe the Alt L1 thesis, you can see this box here, the Alt L1 thesis was playing. Now they're not looking at Solana and Avalanche. They're not included in this. And so they may take up a few percent, but considering Solana and Avalanche really falling way, way off their highs, I think this data is still relevant. So we're seeing Bitcoin dominance, not take out the lows from the 2018 sell-off. And we are now going into the kind of halving narrative probably in 6, 8, 9 months time, which could push BTC dominance back up to get an even higher amount than it currently is. Another major narrative Fidelity focus on is scaling, both of Ethereum and of Bitcoin. Firstly, for Bitcoin, we have already seen a major leap forward in the development and usage of one of Bitcoin's scaling solutions, the Lightning Network. The number of Bitcoin on the Lightning Network has gone up 60% in the last year, with over 5,000 Bitcoin now in Lightning channels. We expect to see more businesses and other use cases. Micropayments are now viable, such as for content rather than monthly subscriptions behind paywalls, streaming BTC for podcasts, or even gaming. I don't think it's going to be in gaming for a long time, to be honest, but maybe some micropayments, some other types of payments. We know Twitter are incorporating payments, and they're going to switch to crypto. They're obviously going to use Bitcoin, potentially ETH, and maybe stable coins or something else. They're obviously going to be doing that. So we can see it slowly coming on. In terms of the Bitcoin Lightning Network, as you can see here, this is the value of Bitcoin in the Lightning Network in orange in US dollars. So yeah, that has come down as the price of Bitcoin has fallen, obviously come up a lot recently, but the number of BTC in the Lightning Network, as you can see, new all-time high. This thing is essentially parabolic in terms of its move. And so this is the Bitcoin network scaling. Lightning Network, basically free and instant transactions of Bitcoin, and with some potential to put other types of assets on the Bitcoin network, like USD stablecoins as well. And, it's just a very important monetary network for humanity, to be honest. This, completely neutral, morally sound network for transferring value, either in Bitcoin or in other assets like US dollars. Moving to Ethereum, the thing that I note is that Fidelity are actually quite adept in terms of their knowledge of Ethereum and how it works and some of the value drivers. And this is a big change from just a few years back when these guys didn't even make research on any of this stuff. And now they're coming with some really good research that shows their knowledge. And I think that shows where Ethereum and Bitcoin at least are in terms of potential institutional adoption, which is really the next growth phase. The narrative around ETH being ultrasound money has also risen. I don't agree with this narrative. Ultrasound money is an absolute joke, in my opinion. But it is absolutely true that Ethereum now uses some of the profits it makes as a protocol, uses those to return value to people that stake ETH. So just like a dividend or a share buyback, that's what ETH does with token burns and dividends from staking. So the supply growth, as you can see here, is negative. This is great when you have an equity or a company that makes profits. Shareholders usually want them to perform share buybacks or pay dividends and return some money in, that gives an investment fundamental value. And so that's why institutions are looking at this now. This is a fundamentally valuable protocol that makes money and passes some of that back to investors. So as we can see here, we really have gone into deflationary territory. So the usage of ETH, if we just scroll down as well, we should be able to see everywhere in orange is essentially where the protocol is burning fees. Everywhere in blue, that's actually a slight production of the tokens. But everywhere in orange, you can see most of the time now, just more usage on the network. And that's what's making, obviously, the fee burn. If we come down as well, we can see the type of users that are actually using ETH, Uniswap, OpenSea, and stablecoins, right? So you have trading of fungible and non-fungible tokens, and stablecoins, really important. And just some other, NFT protocols and layer two networks, which are obviously buyers of ETH as well. So ETH is a profitable protocol that can actually wash its own face, which investors really like. What is the over-under on the Shanghai upgrade? Do people actually believe that the Shanghai upgrade is going to dump the price of ETH? It seems likely that enabling withdrawals will actually increase the amount of ETH being staked. The reasoning is quite simple. Staked ETH is sitting around 15.8 million, which is roughly 13% as of the ETH supply as of end of 2022. This is low compared with many other protocols like Solana or Cardano, which are sitting at 72%. Continued convergence in the stake supply ratio is expected, meaning more ETH staked over time. 13% is very low. The reason why people aren't staking and solo staking is because you have to lock it up and there's no unlock period as of right now. The enablement of withdrawals significantly reduces risks for solo stakers, specifically regarding liquidity. Combine this with helpful plug and play options for staking nodes, as well as programs like MEV Boost, leveling out the staking rewards, we would have a healthy recipe for increased validator participation through 2023. So there is an unlock. A lot of the ETH that is locked up right now in the staking contracts will start to be unlocked in March, at least if everything goes well. And so a lot of the narrative is there's a lot of ETH locked up in staked ETH that can be unlocked. Maybe people are going to want to sell out and actually not keep staking. I believe this is probably a little bit overdone. ETH is showing relative strength here. It's definitely still melting upwards into resistance. Will there be some selling of people that do want to get their ETH back and maybe sell out for dollars? I'm sure there will be. But given that withdrawals will now be accepted, maybe more people will actually stake some of the ETH that they're not staking already. Because if you stake in and you can withdraw it, then that just makes a better product. So yes, there may be some selling, but it may just be counteracted by more people staking. And so I don't think we're going to see this huge dump to 900 or 1,000 ETH just because some of the supply can be unlocked. Doesn't mean everyone's going to sell. What does Ethereum adoption hold this year? Where do layer twos go from here as well? The value driver for a lot of ETH. 2023 will be a year for layer twos to prove themselves. Really looking at Optimism and Arbitrum here. And then in March, Polygon should be launching their ZK EVM. That is a direct layer 2 Polygon network on top of Ethereum. That's where a lot of people are excited about. You have Arbitrum potentially releasing a token as well. There's just a lot of things going on ETH that are potentially going to drive interest in ETH, put it in the headlines, which we know what happens with the price after that. So there's a lot going on ETH that's very positive in my opinion, that I think will just completely overshadow any potential selling from people unlocking through Shanghai. Optimism and Arbitrum have seen significant increases in transaction volume even after the bridge hacks and bear market of 2022. Their success does mean less value accrual to the main ETH layer, as many transactions will just go to layer 2 and be bundled for a singular fee rather than paying on ETH. Yep, I do agree with that. So when you are giving people a cheaper option, then they're going to choose the cheaper option. And so what that means is that you're actually just reducing your profit margins. However, you can't scale whilst charging $5 a transaction on ETH. And so you have to get that scale. So even though you're making less per transaction, the scale is more than going to make up for it, in my opinion. You can see that layer 2 is exploding, which makes the world for alternative layer 1s like Solana very, very difficult. Now Solana is cheap, but so's Optimism, Arbitrum, and Polygon. And so that isn't a value driver for Solana anymore. So they're going to have to compete on security, which they aren't as secure, and then great applications, which Ethereum has the most used applications. So you can see Layer 2 are absolutely smacking it right now. Real world assets is a huge growth area for crypto. So actually taking loan originations, stocks, bonds, ETFs, tokenizing them, putting them on chain so that people can freely trade them. The kind of roadblock here is regulation, because if we are expecting BlackRock to get involved, and they've said they want to tokenize all of their products, right, which is trillions in trading volume, we need regulation to come through and okay that. It's not going to come on board in any big way without regulation. So that is a major roadblock. But as you can see here, we think that this might shift in 2023 based on some of the activity that we've seen. MakerDAO invested in real world assets with their $100 million loan to a bank and the $500 million investment in government and corporate bonds. So real world assets that produce yield, that is actually coming on chain, so you can invest in them through different products on chain and get a specific yield. This is a huge growth area, but regulation is not going to see it explode. I think it's going to keep it probably pretty low. Also, how do you invest in that? You can see MakerDAO, even though they've done some really good work, I think, with some of the products, it's just down only versus ETH. This is Maker valued in ETH, and it's just a disaster, right? So I think, again, the way to kind of play all of these narratives is essentially just this ETH token, which is designed to accrue value and be a bit more diversified, rather than these applications which seem to just be down only most of the time versus ETH itself. On-chain activity has held up really well during this bear market, and we can see signs that we're actually coming out of the on-chain bear market anyway. During the week now, ETH is essentially burning tokens the entire time, which shows that on-chain activity is strong. And for the Lightning Network, you're at an all-time high in terms of that scaling. So for Bitcoin and ETH, in terms of prices, we don't know where the macro is going to take us, but on-chain is just looking like we're actually starting to see signs of, a reversal of that kind of winter and bear market going into more actual on-chain activity, which is going to drive the price in the long run. If you are a trader, get the deposit bonus on Bybit via the link in the description. The Crypto Investor course is getting an update this week as well, and the price is going up at that time. So if you want to get in now, that link is down there as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.